Today, the Biden administration says it's against the passage of the Fit for the 21st Century Act. The Trump campaign announces it will start accepting crypto donations. And Mike Novogratz, Galaxy Digital's founder and CEO, breaks down what advisors need to know about crypto from the CNBC Financial Advisor Summit. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Major cryptocurrencies pretty flat today, with Bitcoin rising just under 1% and trading above $70,000 as of noon Eastern. Ether dropped slightly in the past 24 hours, trading at the $3,700 level just a day before the SEC has to decide whether to approve the first application for a spot Ether ETF. Solana, meantime, climbed more than 2.5%. Ether's muted trading comes after a two-day rally, thanks to reports that the SEC had requested key document updates from potential spot Ether ETF issuers and exchanges. Traders took those headlines as a sign that the SEC was poised to approve spot Ether ETFs, but an agency spokesperson told CNBC it does not comment on individual filings. Final decisions on applications by VanEck and ARK are due tomorrow and Friday, respectively. BlackRock and Grayscale are among the asset managers that also have applications pending before the SEC. Cboe, an exchange associated with 5 asset managers with pending applications for spot Ether ETFs, published amended filings yesterday in response to the feedback from regulators. Cboe, an exchange associated with 5 asset managers with pending applications, published amended filings yesterday in response to the feedback from regulators. Those applicants include Fidelity, VanEck, Invesco Galaxy, ARK 21 Shares, and Franklin Templeton. Okay, let's talk about the top stories. The Biden administration said today that it opposes the passage of the Financial Innovation and Technology for the 21st Century Act, a crypto market structure bill, but that doesn't mean the president intends to veto it. The White House published this statement today saying it's against the bill, citing concerns over a lack of investor protections. The administration also said it's eager to work with Congress to ensure a comprehensive and balanced regulatory framework for digital assets. SEC Chair Gary Gensler also argued in a statement today that the Fit for the 21st Century Act would hurt investors, adding that it would hinder the work of his agency. The bill is expected to see a vote in the House this afternoon. Next, the Trump campaign announced it will start accepting crypto donations. The move is Trump's latest effort to court the crypto crowd, opening a new source of potential funds for the campaign, which still lags Biden in cash despite outraising the Democratic incumbent last month. Other crypto-friendly moves by Trump include a dinner for his NFT backers at his Mar-a-Lago club earlier this month. CNBC asked the Biden campaign about its views on accepting crypto donations, but hasn't gotten a response yet. Trump is not the first presidential candidate to accept crypto donations. Robert F. Kennedy Jr., who is mounting a long-shot independent bid, announced last May that his campaign would accept Bitcoin contributions. And finally, a wide range of tech companies, including some crypto firms, are introducing a coalition aimed at combating online fraud and scams. The group, dubbed Tech Against Scams, includes crypto companies Coinbase, Kraken, Ripple, and Gemini. Other members include Meta and Match Group, the parent company of Tinder and Hinge. According to Match, the coalition gives members an opportunity to share information in an effort to prevent users from falling victim to fraud like pig butchering, a new kind of crypto investment scam that's been gaining traction in recent years. Chainalysis describes pig butchering as a romance scam, which got its name because of the way bad actors fatten up their victims by building trust to then get them to invest in a fake investment opportunity. In a statement, Coinbase's chief security officer said fraud schemes are becoming increasingly sophisticated and that the crypto platform is dedicated to disrupting emerging online scams through collaboration, information sharing, and enhanced consumer education. All right, for our main story, Mike Novogratz, the founder and CEO of Galaxy Digital, spoke with Kate Rooney at CNBC's Financial Advisor Summit this morning. The event brings together the country's top advisory firms to explore the state of the markets, and of course, that includes digital assets. The two discussed portfolio allocation, political crypto sentiment, ETFs, and more.
Mike, it's great to see you. Thanks for being here.
I'm having fun.
It's Bitcoin Pizza Day, is that right? Happy Bitcoin Pizza Day?
It's happy Bitcoin Pizza Day. It's happy Crypto Day because it feels like the politics of crypto are shifting. And what I mean by that, it's, crypto had started to look like a small group of Democrats were just stopping any progress in regulation and in the industry. And for a bunch of reasons, President Trump saying he's the crypto president, he's accepting crypto donations, and realizing there's a vulnerability here in the election year, the Democrats are responding pretty quickly, and we're seeing things that I couldn't have dreamed of 2 weeks ago happening at a very rapid speed, and that's really setting the table for a really exciting, few years in this industry.
Does that make it a safer investment, or at least recommendation from financial advisors, that sort of regulatory clarity that you're talking about, or maybe even just more certainty in D.C.? Talk about what that might mean, at least, for Bitcoin and other cryptocurrencies as an investment.
So let's start with Bitcoin. The fact that the government approved an ETF, that Larry Fink, the largest asset manager in the world, is out there saying this should be part of every portfolio, this is digital gold. As long as the government keeps spending recklessly, Bitcoin should go higher. You can't get much more institutional than that. We're partnered with Invesco in an ETF, both in Bitcoin, and now it looks like the Ethereum ETF is going to get approved this week, maybe as early as tomorrow. And so for the two biggest products to have the stamp of approval from the U.S., at one point, what are you scared of? You've got the richest person in Massachusetts, Abby Johnson, who's been a huge crypto fan and a big advocate. The richest person in Pennsylvania, Jeff Yost, big crypto fan. You can go around, Stan Druckenmiller, Ray Dalio. Some of the best investors in the world recognize that Bitcoin's an asset that should go higher. And so I just keep asking the question, what are you scared of?
Yeah, Abby Johnson has been sort of an under-the-radar Bitcoin bull. But now that you're talking about the stamp of approval, if that is the case, what is the appropriate allocation for somebody who's not entirely in on crypto? They're looking to put a certain percentage of their portfolio or their clients' money. How should people think about this?
Listen, 2 to 5%. Think about what you do in a great stock, right? What's your allocation to Apple or Google or Microsoft? Often it's at least that high. And so I would say 2 to 5%, in the whole space. And you can start smaller. You can start with 1%. What I've learned talking to people about this since 2013, I literally am the oldest guy in crypto, and I've been doing this for 11 years, is get off zero. Once you get off zero, once you have a little bit of an allocation, you start following the story. Like, we invest in things that we understand. And so things that look complicated, we often stay away from. You learn about things by putting a little money on the line. Then you pay attention to the article. You pay attention to the interview. And so if there's one message I'd send to all the investment advisors and all their clients is get off zero.
What role is that going to play within your portfolio? Is it, like you said, the high beta tech name, not even big tech, but are you thinking about it as a growth allocation? And if not, when is it really going to start showing up as digital gold and sort of that safety play? Do you anticipate any sort of shift there?
I mean, listen, I have been loud and clear this year on CNBC and anywhere else I spoke that silver, gold, copper, Bitcoin, other crypto are all going to go from lower left to upper right. They're going to be at a bull market because it's an election year and we have a government that can't stop spending money. And the big competitor, Donald J. Trump, spent more money when he was in office than almost any president. And so you've got populist on the left and you've got a populist on the right, and that makes for a great environment. And so, listen, Bitcoin right now trades like it's a risk asset some days, like it's an inflation hedge some days. Similar to gold, there's not an immediate one-to-one correlation. Good inflation number, having a correlation. It's a narrative and it's a story. And if we get a new administration after this election that comes in and says, we are going to buckle down and we are going to stop spending 25% of GDP at federal level, or 26.5%, and move that back to 20%. We're going to bash the deficits. We're going to be fiscally responsible. The story for gold and Bitcoin isn't as good. It just isn't, right? I don't see that. I don't see that happening.
I wonder what you make of the wealth transfer. You've got a lot of money in the hands of baby boomers that in the next decade or so, multiple decades, will transfer to a new generation. Does that set up Bitcoin and cryptocurrencies for more upside?
It's a huge deal.
Yeah.
When Charlie Munger passed away, I had typed up a cheeky tweet and I said, you can't do it. Charlie Munger's a legend. But Charlie Munger hated Bitcoin. never understood it, never took the time to want to understand it. He didn't have to. He was 95 years old and he'd made billions of dollars doing what he did. And so he didn't have the intellectual curiosity to dig deep and try to understand it. That money, I'm sure some of it went to, family members and that were much younger. Those guys love crypto. They love Bitcoin. They don't love gold, right? Even meme stocks. Older people like, I can't believe these Dogecoin. What a waste of time. You talk to a 25-year-old and they see it differently. And so the overall space, having digital assets, feeling comfortable in a digital world is just so much more enthusiastic the younger you get. And so we're going to see the largest transfer of wealth in the history of the world from gray hair to youth. And that's going to be great for crypto.
Yeah, it's interesting, sort of the generational divide. It seems like even across politics, you were talking about what's going on in D.C., it feels like there's more of a generational gap than almost even a political gap when it comes to crypto.
Yeah, you look on the Democratic side, guys like Richie Torres and Jake Auchincloss from Massachusetts, they love crypto. They get it. They did their homework. They understand it. And you look at the guys that are hobbling into Congress with the gray hair, and it's just not as important to them.
Have you heard the term boomer coin? It feels like Bitcoin, as you said, it's got this stamp of approval. It has actually been a lot less volatile. We talked about the volatility coming in. Bitcoin has been a little bit boring lately. Do you think, that's probably a good thing for financial advisors listening to this. What do you make of that?
The financial advisors broadly cover the $45 trillion of boomer wealth. And so, yes, the ETF is a wonderful product for them. How do you get started? You give someone something that they're used to. The ETH ETF as well. And so my job as a crypto evangelist has been to bring people into the tent. And, how you get into the tent is not as important as getting into the tent. And so I think the ETF is serving a wonderful function. And Bitcoin is the boomer coin because it's easier to understand than the other coins. And so, but that's how you get involved. Every single person I've turned on to Bitcoin, about 2 months later calls and says, hey, tell me about that Ethereum. And then a month later, tell me about that Solana. And they slowly go down this learning curve. The crypto community calls it the rabbit hole. But it's a learning curve. So you go up it, not down it. And they just get more excited about the overall potential of the space.
It's the gateway. Mike, I want to ask you about a survey from our FA community. This is from our events team. They asked, how likely are you to recommend Bitcoin investments to your clients in the next year? 68% said not at all. They said they're not doing it. 24% said somewhat. Only 8% were very likely. What do you make of those results? And what are you hearing from the people who say we're still not comfortable with it, despite everything you've argued here?
Yeah, I kind of love those results because it tells me how much upside we have, right? Think about Larry Fink. 6 years ago, you could find all kinds of quotes about Larry Fink not liking this. Doesn't make any sense to me, does it? Right? Now he's an evangelist. And so the one thing about crypto is you've got to sell someone, they don't buy it. Right? Crypto is sold. We call it orange pilling. When you orange pill someone, you convince a skeptic that, hey, I now see why you like Bitcoin. And what this ETF has done, it has gotten the sales forces of these giant traditional finance organizations educated in how crypto works and why it's important, and they're out selling. And so instead of just Mike Novogratz and a few others knocking on doors trying to convince people, we have the whole Morgan Stanley sales force that's getting educated, and in time is going to start, selling. And let me tell you, we partnered up with Invesco, and they got off to a bad start with the ETF, and the ETF went down in price. And I remember getting on a call with them. I was like, dudes, you got lucky that you didn't sell anything because now you can buy it at $38,000, $39,000, and your clients will love you. If they had listened, some did, and they got their clients in at $40,000, and now it's trading at $70,000. Not one client's going to say, dude, why did you do that? Right? The clients are going to say, hey, what else can I do? And so profits beget interest. And I'm telling you, crypto, if this regulatory thaw continues to happen, Bitcoin will be significantly higher this time next year. If the Fed ends up cutting rates, and I'm not sure they will, but if they end up cutting rates, Bitcoin will be significantly higher last year. And so the message I would tell people is to get off zero, get your clients involved. What's the worst that can happen? You put 1.5%, 2% in, and the thing underperforms the S&P, and it's not really impacting your whole portfolio allocation. You can look at any study about what crypto has done. It has lowered the overall volatility of a portfolio and increased the revenue. And so it is a sharp ratio plus to portfolios.
Mike, I was going to ask you about rates. You answered my question there. I wonder, how else can you get exposure? What do you think about derivatives, some of the crypto proxies out there, whether it's Coinbase or some of the mining stocks? Talk about some of the crypto-adjacent names.
Yeah, listen, I think there are not that many equities. There's Coinbase, there's MicroStrategy, there's a bunch of mining stocks. We are praying, I say a Hail Mary and an Our Father every night, that the SEC approves us to be a U.S. listed stock. There are 3 or 4 other crypto stocks in the queue. Biden's administration's SEC has not been friendly to applicants like ourselves. And so small amount of stocks. I think the miners all trade very expensively. Doesn't mean they can't get more expensive, right? These are momentum names. MicroStrategy trades 2 times its value of Bitcoin. Like that is something that is not sustainable long term by any stretch. It could go higher because, again, limited names. And what's interesting is, why do these names outperform the ETF? Because they have options on them. The ETF doesn't have an options market yet, and all the young kids play the options. And so I think in the next 2 to 3 weeks, at least 2 to 3 months, you will get options on the Bitcoin ETF. I am praying that our stock, which is, far cheaper than any of the U.S. listed stocks we trade in Canada, gets listed in the U.S. And that there will be a big jump then in both volume and valuation. And so I think a year from now, 18 months from now, instead of having 6 or 7 crypto stocks, there'll be 26 crypto stocks, and then there'll be a stock ETF, and you'll see this industry widen out. But right now in the U.S. equity market, there are very few names.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.